Welcome back to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here. Today will be the Thursday, the 23rd of October 2025. So as usual, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. So as usual, let's have a quick recap what has taken shape yesterday, and in terms of the relevant economic data, news flow that has a significant impact on the intraday movement of the broad-based cross-asset classes ranging from the FX market, the major stock indices, and the two commodities market of West Texas crude oil, and as well as gold XAU/USD. So let's start with the overnight US session. So the big news over in the US session yesterday was pertaining to trade-related news between this ongoing fiasco with US and China with this upcoming key risk event that is taking shape over the weekend on Sunday on the sidelines of the ASEAN summit in Kuala Lumpur, Malaysia, where US Treasury Secretary Scott Bessent will meet his counterparts, the Chinese, we call it leading official in this ongoing US-China trade negotiation. So ahead of this meeting yesterday, Trump decided to play punk again over here. So what do you mean by playing punk? So he upped his rhetoric in terms of this brinkmanship, where he actually threatened now to actually impose more software export restriction heading into China over here. So Trump administration is considering a plan to curb a dizzy array of software-powered export to China, from laptops to jet engines, to retaliate against Beijing, the recent latest round of rare export restriction over here. So the key story over here is now they are not going into ban. We call it this export ban. This what I call product ban heading into China. Not only we call it consists of those products indirectly or directly related to advanced semiconductor chips. And right now, the US White House administration decided to expand it to other software that has a component in US over here. All right. So what do I mean by this is that number one, any country that is exporting to China that has a element of US input, and that input is based on the end product of software, be it a laptop and jet engines, that will be restricted to flow into the shores of China. So that created a bit of risk off in the US stock market yesterday. So what do I mean by that? So what you could see over here is that at the start of the US session, the market sold off, and it sold off. It only managed to recover at the last 2 hours of the US session yesterday from 2 a.m. Singapore time this morning, which is on the this morning, early Wednesday, 23rd October, before shaping a minor recovery over here. So same can be seen on the Nasdaq 100 as well, which actually fall the most by negative 1%, almost negative 1% against the S&P and the Dow Jones Industrial Average. So the Dow Jones Industrial Average fought by negative 0.7% over here, what we could see. All right, and also the Russell 2000 faring the worst, which is being a small cap component that is highly sensitive to risk of factor, fell by negative 1.45%. So if you look at the heat map of the S&P 500, the worst hit was give me it very quickly, were the semiconductor related play or the sector, and as well as several mega cap technology stocks as well. So the semiconductor almost entire in the red, except for Qualcomm, which managed to gain modest gain of 0.26%. Nvidia is down by negative 0.49%. Apple down by negative 6.4%. Amazon down by negative 1.84%, and Alphabet, which is the parent company of Google, managed to buck the trend, up by 0.5%. So, and also in early today's Asia session at after 4 a.m. Singapore time, which is right exactly after the close of the US session yesterday. Tesla reported its Q3 earnings. So Tesla has a earnings miss over here. So what's interesting over here is that, let me share with you the 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 numbers of Tesla. Okay, so very quickly, Tesla said that the revenue managed to beat in the third quarter, increased to 12% year on year to 28.1 billion, but earnings miss estimates as capital expenditure jump. That means this due to rightly due to tariffs as well. So if you look at the numbers, earnings per share actually came in below expectation at 50 cents adjusted, while the consensus is expecting 54 cents. What revenue managed to beat 28.10 billion versus the consensus estimate of 26.37 billion. So what's interesting over here is that the share price of Tesla actually plunges right after the release of these earnings results over here. So if you look at the share price of Tesla, it actually fell by almost 3.8%. If you look at my screen. All right, let me expand my screen so that you guys could have a better view of the charts. Okay, so it fell by negative 3.8%. But what's interesting over here is that we know that Tesla is the mega cap stock that has a significant weightage in the Nasdaq 100 and as well as the SPX 500. So right after the release of this earnings result of Tesla and its negative share price reaction, which is negative 3.8% during the start of the Asia session, that means way early at 4 a.m. After 4 a.m. Singapore time, it does not have any negative material impact on the S&P E-mini futures and the Nasdaq 100 E-mini futures that are trading right now. So what do I mean by that? So if you look at the heat map, the price action of the E-mini futures. So in fact, the S&P E-mini futures continues to recover in today's Asia session. Notice that this is the V-shaped recovery, up by 0.15%, and the Nasdaq 100 up by 0.24% over here. So net overall, very interestingly, support level continues to hold on the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures, and those levels are being we call it reacted positively in our daily doses pivotal support, which we highlighted earlier. So what do I mean by that? So if you look at the price action of the S&P 500 index over here. So on Monday or on Tuesday, we do have a pivotal support at 6,670. So this 6,670 yesterday, at the start of the US session, then there was a sell-off. Sell-off managed to survive in the middle part of the US session. And in today's Asia session, the price action didn't plunges despite Tesla negative price reaction from its Q3 earnings result, and the S&P 500 CFD index taking into the price action of the S&P 500 E-mini futures continues to shape a higher low as it fast approach this intermediate resistance level, which is my upside trigger level for today at 6,730, to increase the odds of this ongoing potential minor bullish reversal as it begins to shape a higher low right exactly after the test of its 6,670 short-term pivotal support. Very similar on the Dow Jones. So Dow Jones Industrial Average, Tesla doesn't have a significant weightage on it, so which is the US Wall Street 30. So that also managed to bounce from our short-term pivotal support previously at 46,250 level. So two resistance level to watch out for today as we head into the US session thereafter. 46,680, a breakout above it potentially takes up higher towards 46,920, and previously it was tested on Wednesday, which we highlighted on Tuesday, the new fresh all-time high at 47,160 before it did this minor corrective pullback in the last two sessions. All right, so that's for the US stock market. Overall, despite this negative news related flow, one from the trade front, US-China trade front, and one coming out from Tesla, from a technical perspective, the price action still remains positive given the fact that the pivotal support still continues to hold, as explained to you guys earlier. All right, now onwards towards the FX market. So the FX market, we start to see a minor dollar bounce in today's Asia session and in today's and yesterday's session as well. But the bounce is rather we call it not so pronounced or not so strong over here, as it look out to seek to retest that 99.40 intermediate resistance in this potential 4 month plus since July, coming to the fourth month of I would say medium term symmetrical triangle range configuration that the dollar index is being trapped inside over here. So given the fact that it's still oscillating within this medium term symmetrical triangle range configuration, that explain on the intraday basis we do not have a very nice trending movement for the major US dollar pair over here. And also yesterday's this ongoing bounce on the US dollar index has been attributed to two major uh, dollar pair. What are the major dollar pair that attribute to this bounce over here? One of them is the European currency, which is the euro dollar and the sterling dollar, and most importantly is the dollar yen. So later I'll explain step by step what is moving this major dollar pair. That means the dollar yen, the dollar sterling, that has an impact on the dollar euro. That means two currency that is actually generally a weaker one, which is the sterling and the yen. So let's start with the sterling first. So sterling, yesterday the sterling plunges because inflation number coming out from UK came in below expectation. So if you look at the core inflation rate, taking into account of a month-on-month factor, it was at almost no growth. Uh, Market expecting a slight inch up to 0.2%, but for the month of September, it came in at 0%. And if you strip out those seasonality factor by looking at a year-on-year basis, a longer term, for the month of September, it also came in way below expectation. Market is expecting at 3.7%. It came in at 3.5%, and it also inches lower by 1 basis point from 3.6% in the previous print of August over here. So then overall, we know that the UK economy on the demand side, the growth side is not very strong, given that the labor market continues to weaken, and with core inflation now hovering below expectation and continue to inch downward from the previous month of 3.6%, that could actually increase the push from the those within the BOE to actually push up for one more interest rate cut from UK. So that actually causes the currency pair, the sterling dollar, to actually plunge, giving the push up in the dollar index. And also yesterday there was also a report coming out from Japan. So Japan right now, under the new administration led by the first female prime minister, Takachi, and we know that Takachi, she's a very strong advocate of Abenomics, which is number one, expansionary fiscal policy financed by long dated JGB bonds. That means indirectly looking out for a easy monetary policy over here, or forcing Bank of Japan to undertake a much more easy accommodative monetary policy. And there was actually a report saying that the new administration is now preparing for a economic stimulus package that is likely to exceed last year 92 billion US dollar terms. So they are looking for a package of more than 13.9 trillion yen, which is amounting to Sing dollar 120 billion over here. And this more than 13.9 trillion yen, because it's economic stimulus, is much more than last year. That actually rise the fear that more deficits spending or deficits financing may need to be undertaken by longer term GGB bonds, and that indirectly could add pressure to this ongoing normalization monetary policy stance that undertake by BOJ since 2 years ago, where BOJ may be forced to hold back their gradual interest rate hike. So that causes the dollar yen to actually spike up higher in today's Asia session, going back above the 151.70 level. All right, over here. Now, the next story I'll share with you guys over here is more pertaining to the oil market. So oil market actually rallied yesterday and rose to above the $60 US dollar per barrel for West Texas crude oil, riding on the news of this brinkmanship against, where you know that in the last 2 days, there was mentioned that Trump and Putin may meet up in person for the second time to diffuse the tension between Russia and Ukraine in this ongoing Russia-Ukraine war that has been dragged on for 3 years plus. So oil surged yesterday after Trump announced sanction on Russia biggest producer. All right. So this sanction marked a U-turn for Trump, who has announced last week that he will meet Putin in the coming weeks and said repeatedly that he believed that Russia wanted to end the war. So it seems to be a bit of a carrot and egg situation again, where a carrot and stick situation, pardon me, where now Trump is now showing the stick, threatening Russia to say that, hey, if you do not want to come to the negotiation table, we may start to impose more sanction on Russia oil over here. So a lot of brinkmanship at play. So oil price actually rose yesterday. So what's interesting over here is that the rise in oil price right now has now come towards the give me a minute. So the rise in oil price now has now rest towards the 60 and 55 level, 60.55 level, which is the 20-day moving average over here. So it's a 2-day of rebound that's being seen on oil price on Tuesday, Wednesday. So Wednesday rebound is quite significantly large over here. So this is the biggest rebound that we see in the last 2 weeks over here. So up by 3%, okay, up by 3%. And right now it's actually resting right exactly at the 20-day moving average, acting as the resistance at 60.55. So over here, what I'm going to do over here is that for the intraday movement, I will actually use this 60.55 to be my pivotal resistance level over here, pivotal resistance level. But in order the oil price action to actually gain much bearish traction, it got to break down below this downside trigger level that I have, which is 59.15, to revisit 57.90 and 56.80 again. However, if we start to see a push up above 60.55 with an hourly close above it, then this ongoing counter trend rebound in oil price in the West Texas crude oil could continue to extend further towards the upside, towards 61.80, and even the next level at the 50-day moving average over here, which is at 62.90. Okay, let me put it in writing. All right, so that's for the West Texas oil. All right, so before we go over here, before we touch on the second segment of the datos, which is my chart of the day, let me share with you guys on this upcoming expectation on the US Federal Reserve monetary policy guidance or stances as implied by the Fed Funds Futures Traders price action. All right, taking into account of the CME Fed Watch 2. So why I'm going to show you guys this, because it's very important. Why? Because this Friday we also have this delayed US CPI data that has been specially tasked to be released to the market despite this ongoing US government shutdown. Okay, so the US White House administration made a special case calling or forcing those statisticians that is in charge of compiling the basket of US CPI data to come back to office and release this delayed US CPI data, which is this data for September that is out on Friday. So later, tomorrow, I will share with you what is the time to take note of. So ahead of this release of the US CPI data on Friday, the Fed Funds Futures traders continues to assign a high odds that the US Federal Reserve will do another 25 basis point cut. So that will be the second cut for this year, following the previous cut in September, to bring the Fed funds rate down to 3.75% to 4%. So that is still a high odds of 96.7%. So the current Fed funds rate is at 4% to 4.25%. And what's interesting over here is that based on the aggregated tab, where we're able to see the Fed funds futures bets in terms of odds in the months ahead FOMC meeting. So the Fed Funds Futures trader also assigned a high odds for the third cut to come in the last meeting of the year, which is on the 10th of December 2025, which is rather high. Previously, we talked about a month ago that was only 70%. So now the odds has been rise to 96.96%, put it at 97%. The Fed Funds Futures traders is looking potentially for the Fed to do a third cut for this year to bring the Fed funds rate down to 3.5% to 3.75%. And the dovish bets continues to increase into 2026. So in 2026, the market is assigning a high odds of another cut at 88% chance to on the 18th of March 2026 FOMC meeting to bring the Fed funds rate down to 3.25% to 3.5%, and another high chance at 99%. In June, 17th of June 2026, to bring the Fed funds rate down to 3% to 3.25%, and the next cut, potentially 83%, may come in on the 28th of October 2026 meeting to bring the Fed funds rate down to 2.75% to 3%, and then thereafter the rates will be stamped throughout the year and also into September 2027. So what the market is now expecting is that the Fed could potentially do 3 more cuts in 2026 over here. 1, 2, 3. Then thereafter, once the Fed funds rate reach 2.75% and 3%, the Fed may stamp it across throughout 2026 and also throughout 2027 until 15th of September 2027 FOMC meeting. So this is based on the current Fed funds futures traders price action behavior, taking into consideration of the latest news flow and relevant economic data releases. So this price move, these odds may change or confirm will change after the release of the CPI data, depending on how the CPI data came out on Friday. So we'll touch more about that in tomorrow's daily dose. All right. So with that, the market is still expecting the Fed to cut its rates. So once market is still expecting the Fed to embark on the interest rate cut over here, very likely that could actually cause the US dollar index to remain capped within this symmetrical triangle range configuration. So I'll be watching very closely the two resistance level, 99.40, 110/150, which is the top of the range over here, and also the 200-day moving average that is acting as a significant resistance at 100.50 level. All right, so that's for the US dollar index, taking into account of the price section of the Fed funds futures traders on their expectation on how the Fed may maneuver in the months ahead. Right, so now let me go to the second segment, which is the chart of the day. So before we go to the chart of the day, let me expand my screen so that you guys could have a better view of the charts over here. So my chart of the day will be two charts. I'll feature two charts over here. One will be the US market, US stock market, which will be the Nasdaq 100. Right, so Nasdaq 100, given that it managed to shape that bounce off the pivotal support at 24,785 over here. So 24,785, a bit of excess yesterday. So yesterday there's an intraday low at 24,680. Okay, so a bit of excess at 24,785/680. So that will be my pivotal support level on the Nasdaq 100. Upside trigger level will be at 25,030. A breakout above this level potentially retest the current all-time high area at 25,225. All right, so this is the two resistance level to watch out for today. However, if we start to see a breakdown below 24,785/680, this recovery or bullish reversal scenario on the Nasdaq 100 will be invalidated to see a choppy downward drift back towards 24,565 maximum, the all-important critical near-term minor support level at 24,290, which was the gap up support, and the support level was managed to survive during the push down of 14th of October and 17th of October in lieu of that US-China trade tension that has taken shape since this Trump threatened of this additional 100% tariff on 10th of October, and so now confluence with the rising 50-day moving average as well. So that's for the Nasdaq 100. Next up, of the chart of the day, I'll feature the dollar yen over here. So the dollar yen managed to do a V-shaped recovery after the test of that rising 20-day moving average, and now en route to our major resistance level at 154.50, which is the major descending trend line resistance that is still in place since 3rd of July 2024. Once the dollar yen hit 161.95, that actually attracted the Ministry of Finance intervention, instructing Bank of Japan to intervene in the FX market by selling dollar, buying up the yen. Right, so this will be a resistance at 15450. So on a intraday basis chart over here, I'll be using a very tightened short-term pivotal support level at 15150 over here. So 15150 will be my rather tight pivotal support level, where price action managed to survive on 3 occasions on the dollar yen since 21st of October, 22nd of October, and as well as yesterday's US session. At the start of the US session yesterday at 50, a bounce off from the 15150 level. So hereby, this will be a rather critical near-term support level in order for the boost of the dollar yen to surge higher, heading up towards the major resistance level at 15450. So two resistance level to watch on the intraday basis: 15245, a break above it potentially take us up higher towards 15365 / 15390, which is this level over here, a Fibo extension level, and as well as, okay, give me, yeah, this conjunction area here from 28th of January to 12th of February this year. Only a bearish breakdown below 15150 will invalidate today's bullish bias to see another choppy downward drift on the dollar yen, back down towards 151 figure level and even 150.35, which is now being coincided with the rising 20-day moving average as well. All right, so that sum up the second segment of the daily dose, which is our featured two chart of the day. One will be the Nasdaq 100, followed by the dollar yen over here. So now, before we go, let us now proceed to the third segment of the daily dose, which is the economic calendar. So what are the key events to look out for today? So today will be Thursday over here. So over at Thursday, if you were to head down towards the European session, there will be a rather quiet European session. So for those who have interest in the Canada dollar or the dollar CAD and the CAD crosses, Canada will release a key important economic data, which is retail sales for the month of September, preliminary one at 8:30 p.m. Singapore time. And during the start of the US session, I will say that not during the start, slightly after the start of the US session at 10 p.m. Singapore time, we will have Eurozone economic confidence flash data for the month of October, where market participants is expecting almost the same figure, negative 14.9. Market is expecting negative 15%, and negative 15 level, not 15%, for the month of October over here. Then thereafter, we will have a rather quiet US session. All right, so this initial jobless claim, this data will not be released because market is not looking up for a release of this data, given that the US government continues to shut down for its third week over here. And before the start of Friday session, we have a slew of economic data to take note of. At 6 a.m. Singapore time, we have the Australia S&P Global PMI flash data for manufacturing and services. So that for the month of October, so that could influence the Aussie dollar and the Aussie crosses. And most importantly, we will have Japan inflation data out for the month of September. So they could actually potentially move the dollar yen as well over here. So market will be looking at the core inflation data, and most importantly, the core inflation data, which is excluding food and energy for the month of September. So market is still looking for a rather rather steady upward trend of inflation growth. So so far consensus has not been coming yet for the core one. So for trading economics is projecting the core rate, inflation rate in Japan for the month of September to be at 3.2%, almost in line with 3.3%. And for the core inflation rate, market is expecting a slightly upward drift up, 2 basis point up from 2.9% from the previous month of August print at 2.7%. All right, so that sum up today's Daily Dose of Market Insights. I'm Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.